Hello and welcome everybody to another episode of MoreTalk, where we are live taping here on a Thursday, 2 p.m. on the East Coast.
And 11 a.m. in sunny San Diego.
It's been a crazy week here in mortgage, and I'm sure we will have to save it for another episode. Maybe we'll get some viewers to come in and talk, but Housing Wire had the gathering, and they really took over a lot of the airwaves of at least LinkedIn, or they are their own publication. That's where I've seen a lot of news coming out of. How about yourself, Mike?
It just seems to me like the people that I'm talking to in the business that are in Arizona right now, I mean, it seems to be pretty busy over there. A lot of networking that's going on, and I'm excited to see the more type of news that's going to be coming out as a result of the networking that's been happening. We're probably going to see lasting relationships go into effect here over the course of the next few months.
Yeah, and for those following, there's a lot going on in real estate and mortgage right now. Please give us a subscribe if you're listening to our podcast on YouTube, which, by the way, when we first started this, YouTube podcasts were part of YouTube, but Android has taken out their podcast player. And now, so if you're on YouTube podcast, that's their main Android player now. So the audience has been ticked up quite a bit for us. And then we're also on Spotify. So if you're on there, give us a subscribe as well. Our episode last week was really cool. If there's any parents out there, we touched on Bluey, which I really enjoyed. So there's some people in the past that are certainly worth listening to, a lot of great IMB leaders. And we have a great one today in Susanne Livingston, who I know very well from attending a lot of conferences. And you'll hear some more compliments out of me, but also considered a legend by Michael Zhao here because he is from San Diego.
I am. I've known about residential wholesale for 2 decades, almost 3. So very well recognized and well known out here in San Diego. So I'm happy to be here with Susanne and to continue the conversation.
Well, thank you, gentlemen. That's nice of you both, and very nice of Michael to invite me. So I appreciate you both.
Susanne, do you want to maybe tell about we're obviously interested in the past, right? And you could talk about how you got into the industry, but that happens on a lot of podcasts. We try to keep it a little more fresh and raw. So can you maybe how your history of growing a company, we're always very interested in that, hoping that there's loan officers and processors and realtors out there that'll know that they could maybe be the next Susanne or Brad Livingston. But as you've navigated multiple markets, what has that taught you about today's market, and what do you think of the future of it?
Yeah, I think it's a really good question. I mean, we started in 1994 in a very different marketplace, and I had a wholesale background. And at the time, I had been working for Impact for about 8 years. But I think what I learned is when we started our company, quickly went from being mortgage brokers to mortgage bankers, understanding the value of having more control ultimately over your process than when you're brokering, and establishing your tickets. So that was a monumental shift to get Freddie, Fannie, Ginnie. And then what truly gives you longevity over time is building up your servicing portfolio, which we did in 2020. So although we've been in the business 30 years, we have always taken our time to making those key changes, Michael, because you got to have cash. When 2008 hit, some of our, competitors who hadn't been stashing their cash because it was such a boom year, and you'd go into the other retail, our retail, and we just are in the retail chain for our listeners. So we never went into wholesale, even though our name started as Residential Wholesale Mortgage Inc. with my background. We rebranded several years ago to RWM Home Loans because we're truly in that retail channel. But some of our peers that were building businesses went out a little too fast, too many branches, over-improved their offices, right? And kind of lost touch with their cash flow. So if I could give any advice to people building companies, is you need to be conservative. Don't get outside of your boots. Know that you can cover your overhead And then in this last downturn, right, so many people were being advised to right size. And what we did a little bit differently is we didn't make that cut, gave it a lot of thought, and held on to more people than I think many of our peers did. So consequently, as the market is becoming robust again, and we're very excited about the rest of this year as we come up to profitability for the first time in 2 years, right, Mike? I mean, it's kind of tough for owners, right? But
Yeah.
you have to make all the cuts that you can, certainly from, your vendor perspective, renegotiate contracts. From our executive team, I mean, it was a buy-in from everybody. Everyone, either Brad and I set our salaries aside because after 30 years, we have that ability. Some of our executive teams, they step back, right? We all made it happen. And then we just invested in the company over the last 2 years, not only financially, but back into our people and most importantly, our products and programs that affect loan officers. So that is in a nutshell without getting into too many details. And you guys can certainly ask any questions.
I would love to.
As you know, I'm an open book. So I like to share in successes. And it's funny because some of my employees are like, why are we going to, talk about that? That's kind of our secret sauce. I'm like, no, it's fine. If it helps somebody else, don't worry about that. It'll come.
I don't have a secret sauce question for you, but I do want to make mention. There were 2 companies that I had once affiliated with that are now a part of RWM. One of my good friends, Jim Doan, who's now a part of RWM, and then formerly West Coast Mortgage is now also a part of RWM. And those guys, in their own right, were very good producers, actually. Jim being one of the first $100 million producers way back in the 90s with CTX, and then formed his own Pacific Capital Mortgage, and now he's with RWM. Anyway, my point.
Yeah. Don't forget Scott Moore's Genesis Mortgage.
Oh my goodness.
Another very successful independent private banker. And so, but Mike, those guys, before they joined with us, they were all our good friends. So the reason why we knew Jim is Jim always was recruiting us at Del Mar Racetrack. Every year he'd come over and say, Brett, you need to join me. And then in 2008, when everything turned upside down, he goes, Brad, I need some help, And same thing with Sean Kelly, right? In West Coast.
Yeah, Sean and Roger.
That team, I know them because Sean's best buddy surfs with Brad and I. And we know their kids. And so many of these things, we're talking about relationships right at the first part of this call. It's all about those relationships that really catapult you forward. Same thing with Scott Morris. He was very involved with Scripps Stevens Cancer Center fundraising, and there was a tennis tournament because Scott was tried his pro career at one point. So that's how we got to know him, was through philanthropy and through a fun tennis tournament. So through those relationships, good things can happen.
Absolutely. Can we rewind just a little bit in time, if you don't mind? What we experienced back in 2008, we're not experiencing that right now as far as housing is concerned, but we are experiencing that downturn because of the lack of inventory. Back then we had too much inventory. Now we have a lack of inventory, and we also have higher rates. What are the differences that you think right now as a business owner of an independent mortgage bank? What do you think is the, not necessarily secret sauce, but what are you networking and collaborating and speaking to our colleagues out here in San Diego to say, you know what, we've known each other for a long period of time. And I'm talking about Genesis and West Coast and then Pacific Capital. I mean, all we're doing hundreds of millions of dollars of business. And now they're with you. So what are you doing differently that's causing you to bring success over, right? I don't think you're buying them necessarily. I think you're actually just bringing success over because of your own success. So what do you think are some of the attributes that you have as an independent mortgage banker that's causing you to be successful? I know you talked about renegotiating contracts and so on and so forth. What's your culture like, though, that causes you to want other successful people to come to RWM? And how can other IMBs in other parts of the nation look at residential wholesale and say, this is what, maybe I want to do a site visit and see what your culture is like, so that we can maybe emulate that for recruiting purposes and or copying purposes?
I'm really able to speak about this, Michael, I think even more informed than I was last year, because you guys may not know, but first part of this year, they got me off the IR bench and said, hey, we want you to lead our recruitment. I'm like, okay, I got this. So we went out with a blitz strategy in January of 2024. And I didn't know anything about external recruiting, internal recruiting, what works. But I had to listen to my CFO, Trevor Gates, who said, you know what? We need production. We have an incredible platform, but we need to drive production. So through talking to so many people over first quarter, what is important to a company is that everyone has a seat at the table and feels as if they could be in a leadership position. It's a John Maxwell kind of mindset, right? I'm here, Michael, to make you the best possible person you can be. Having good conversations with your employees, many of whom we had to be shapeshifters and try a new role. And as long as they were willing to work and to learn and felt that they were valued, we want you to be the best. Educating people, even when you're in a down market, culturally having book clubs and activities outside of office that show people from different departments that they are more alike than they are different. We started to get a little siloed about 5 years ago. And
what do you mean siloed?
Siloed is like, well, my job is processing and I do my job well and I have my manager and then it goes into underwriting. And I don't think there was a deep-seated connection that everybody's actions affect somebody down the line. And we're trying to be more solution-oriented in a positive manner, constructive criticism. And we were able, through our activities and rewarding people for core values, to pull these departments together. And they got to be in charge of designing their own workflow. Like, how can you make it better for the next team member? And vice versa, throughout the whole manufacturing process, if you will.
Are you talking about ops as well as sales together?
I'm talking specifically sales. I mean, ops right now. Yeah, sales is a whole different topic, but in order for your culture to work, all those people must feel empowered so they can be productive to keep the production flow, going. So we invested in our operations, in our process over the last 2 years, and then doubled down on all the things we could do for our sales force to get out in the marketplace and be experts in whatever marketing channel they wanted to specialize in. So every loan officer gets a customized marketing plan, if you will, because every area is different, right? If you're in Fresno or in San Diego or in Arizona, and we've gone from 17 states to 20, and we have our eye on 35. All those areas are quite different and distinct. So we have a whole marketing department that comes alongside of them to set them up for their marketplace. But culture is driven by core values. Those core values must be clearly defined by your management teams or leadership teams. And then, like many companies, we reward that every single month. So people are nominated. One of our values is innovate relentlessly. Deliver daily. So if somebody stays late and does something special, so set of loan docs gets out and signed and back and checked in within a 24-hour period, that person might get nominated for that deliver daily. So
interesting.
It takes a lot of hard work to build culture, and more importantly, to keep it and make it something that is sustainable over time.
I think it's fascinating because it really is like deliver daily, back to those core messages. We went through a long abundancy period where it was just produce, right? And not the how you got there or the why, but just what's your production, the what. When I call all these IMBs and lenders in this market, I am realizing, like you said, Susanne, that servicing matters. And I'm wondering if loan officers understand when they're being recruited, is the servicing portfolio number 12 on the list when it should be top 3? And it's a little bit, I guess, different, right? Because we haven't found a way to compensate a loan officer for the servicing. They close a loan and they get paid. But I would assume lenders that have a servicing portfolio can invest either in technology, or it sounds like you are investing in people and building that reputation so that when the market comes back, the ones with servicing portfolios will be the ones still around. Should the servicing be more talked about among the loan officer channels that listen to this show?
I think we are educating loan officers that we're talking to about that exact point, because I don't think they realize that the income that is derived from a servicing portfolio can offset the losses that you're experiencing today. And certainly over the last 2 years, if we didn't have that servicing income, it would have been a very difficult situation, even more difficult situation, right? And then when times are good, that money can be used to invest in your company, whatever you need to develop and put more attention to. So yes, I think servicing is very important. And when loan officers are talking to me and they're talking about going to larger, entities, the big independent mortgage bankers, some shops will not use their servicing income to offset their retail divisions. So our strategy is, I think, more unique to an independent mortgage banker. The other thing that we do differently from a stability standpoint and investing in our people is we are one of the few companies that profit share when we are profitable. So to date, we have given $10 million to our employees over time.
That's incredible.
You want to say that number again in case we want to clip that?
$10 million we have invested back to all of our employees over time.
Wow.
So
in
the last 2 years, we weren't able to do that, but Brad and we're not a publicly traded company. It's a privately held company. So we're not beholden to shareholders. And so
two absolutely great people.
Oh, yeah.
Thank you guys. But it makes more sense for us to reward the people that are making us all successful rather than trying to just pay more taxes and, do something that's financially better for Brad and Susanne. It's not, this company is so much bigger than Brad and Susanne. Brad and I are not in the day-to-day operations now, which is so rewarding with 180 employees that our leadership teams are amazing. Our young leadership teams have learned so much, and they do all this great work. But we're just here, basically to guide, to do these kinds of things, to teach them how to conference. Because both you Mikes know it's a gift to know how to conference correctly. Don Curtis might be the best from California MBA board, but and I know Mike Kelleher and I have spent many conferences together solving the world's problems, but I do enjoy learning from my peers and trying to get more strategic in our movements today.
I think people interaction is important. Can I just ask a raw question? And then, sorry to jump in here, Mike. And you can answer this how you want, Susan, or even punt on it. But about 3 years ago on LinkedIn, these ESOPs were very popular. I think that's the acronym for it. But they were saying that we're going to give our company over to employees during the good times, right? Was that a rev share play, or was that more of like an equity play that is just in this market? I just have never seen it. Like at one point, I think I saw 8 companies bring it out. It was all over LinkedIn for a good 9 months to a year and a half. And I have not seen one mortgage company. It was everywhere. And now I've yet to see it once, maybe like in a long time. And so I'm wondering, is that similar to what you're talking about? Or is it a different model that just doesn't make sense in this market? And that's why no one talks about it? Or what was that?
Well, I think the ESOP model makes sense from a recruiting angle, because if you're wanting to align yourself with somebody, and so many loan officers really, they want to be where we are today. It's taken us 30 years to get there, but they want a piece of that. And then ESOP is a way for employees to feel like they actually own part of that entity. So I can see from a recruiting standpoint, why you would set that up. I have been told, and I'm not an expert on ESOPs, but I have been told that if you're considering selling your company at some point in time, which a lot of people build to sell as well, that an ESOP makes it a little messier, right? Because now you have all these people in play. So for us, it's just cash on cash. let's flip back to 2020. Susanne and Brad, not only did we do profit sharing, we had discretionary bonuses because we were working people overtime. They were grinding it day in, day out. And so discretionary bonuses on top of profit sharing. And then we also ran programs. For example, we had a $2,500 budget for every employee across the company. Marketing and the leadership team came up with this great package whereby we had, my favorite package was the Peloton package. So you could choose as an employee. This is every person from the receptionist to loan officers who are killing it, right? But everybody got to choose. If you wanted the Peloton package, you got a free Peloton. You got some Peloton garb. If you were a barbecuer, we had the killer barbecuer grill package. If you were a kitchen chef and loved cooking at home, we had this kitchen package with blender, and it was, people just went nuts. So for us, it's more just cash on cash. Let's not get fancy. Let's walk the walk. Let's do what we're going to say we do and reward our employees and treat them, treat them with the respect they deserve for helping us be so successful. So we thought about that ESOP for a hot minute. Over the last 2 years, I don't think anybody wanted to be in my shoes or Brad's shoes. My husband, Brad, president, is in charge of our finances. He's an amazing steward of our bottom line. He's one of those guys that can look at the financials and go, Trevor, something is off. We need to look at this again, right? So we just make sure that we keep our cash, give it away when we can, and it's a pretty good position for us, and people love it. And that's why people like West Coast Mortgage, Jim Doan, and all his people we hired over time. And Scott, he was a $150 million producer back in 2020. He could leave, and I'm sure he's being recruited each and every single day. But we must be doing something right? If we can retain all these guys. And Stephen Littlefield came over. He was with Signature Funding back in the day. I don't know if you remember him, Michael Zhao.
Oh, yeah.
We just lost Stephen Littlefield. We're going to miss him. He passed away unexpectedly a couple Fridays ago. So, it's a tough loss for us. But again, he came over, and Stephen is still with us today in many ways. He trained a lot of our young people, taught them the red rope policies, the arts of sales, and he will be sorely, sorely missed.
What do you think is the difference right now? There's a lot. Andy Harris, who was on our show a few weeks ago, was talking about the difference between a broker and an independent mortgage banker. And he said if you owned a mortgage company back in 2008 and then you joined somebody else, you basically, and he would ask the question, well, what did you sell your equity? You're not only bringing over your originations, but you're also bringing over your past clients and your future clients. And you're going to join this other company, and you lost 100% of your equity. And so when you say you're giving out dividends based upon profitability, and I know for a fact that you guys are producing because of the type of not only service that you provide in ops and also with the type of producers that you brought in. So if birds of a feather flock together and those birds are success, then RWM actually has some type of secret sauce. So do you tell people who want to join RWM, but now that you're in charge of recruiting, are you actively also trying to tell other people, hey, maybe instead of opening up your own branch, I'm talking about someone who may want to join that broker that's down the street, that's one of the largest independent brokers. Instead of joining that large independent broker, why don't you consider joining RWM? Because you can be your own broker as a business owner, but you can also be an independent mortgage banker with us, and this is how it's going to benefit you over time. What do you do that's different in recruiting them to your platform?
So what you said, Michael, is exactly correct. When I'm bringing a broker over to a banker model, I tell them, I say, you can broker with us because we have probably 40, brokers, but the banking entity that they don't really understand and the service of the platform outshines the broker model entirely. I think the reason why we had, and I used to be a broker, and they love that because I can talk that, and I originated for over 20 years. So I know exactly what it is to be a broker, but you're also so much more involved in your process, and you have more community with an independent mortgage banker. If you look at our marketing out of the box, presentations, flyers, co-branding, our 15 tech vendors that, are integrated seamlessly with Encompass, I said, we're actually not competing with brokers at all, because what we have is like a unicorn platform. If you want to double or triple your volume and you're a broker right now, you want to come over to the banker side and leverage all my tools, get out of your way so you can originate more and start automating your marketing and allowing our processing teams, LOA teams, support teams to close your loans. Because so many of the brokers love to be embedded in the process, right, Michael? They don't know how to get out of their own way.
Talking with a wholesale rep about this, and I know you were talking to the other Michael, but he said that exact point, that during these times, there's obviously people going over to the broker market. They're all going to go back to the IMB market when rates come back to at least somewhat of an abundancy model, and those IMBs that are investing today in top of the funnel marketing to bring it in and automate it. But the reality is there are some loan officers that have forgotten that this is a sales and marketing job, not just sales, and they need to be able to outsource better, which you can do easier with an IMB, and not get caught in processing your own loans, because your funnel will dry up if you keep doing that and repeating that. And the IMBs typically give you a better nurture place to do that. However, not every loan officer is built the same. And so I think that's where we as a show try to make sure that we acknowledge that throughout the episodes if you listen. And we are here at the bottom of the hour. So this is MoreTalk, and we are weekly on LinkedIn Audio under the hashtag MoreTalk. We have some amazing guests in the past. We have some amazing guests coming up, but that is where you can come. And if you do come, you can come up on stage live and ask questions to the guests. Like, that's the whole point. And then you subscribe to our station if you're listening on YouTube, podcast, or Spotify. That way you get the weekly alerts on Sundays and the video that we put a lot of time and effort into on Mondays that sum up our episodes. And today we have, as you're listening to this, whether it's on Spotify or YouTube podcast, we have an amazing guest, Susanne Livingston from RWM, which is a large independent mortgage banker out in the West Coast in California, but also in those states out there. And if you don't know what an IMB is, please go back through some of our previous episodes, as Michael Zhao and I do a pretty good job from episode to episode trying to explain it. So I didn't mean to interrupt you there, Michael. What were you going to ask?
Yeah, absolutely. Thanks. I appreciate that. Suzanne, remember when Todd Duncan was talking about red activities and green activities? Green activities are making you money. Red activities are things that don't necessarily make you money. Because when you were talking about how you're talking to other brokers or even originators that want to be their own IMB or form their own IMB because they want to rock the world, what do you speak to when it comes to the originator that wants to all of a sudden now be a broker or be their own IMB as far as a green or red activity? How do you speak to that?
Okay, so Brad and I started our company with $1,000 in 1994. It would be very difficult in the marketplace today to start an independent mortgage banking company with $1,000. So to step into the shoes of the independent mortgage banker, you need millions of dollars in reserves to support the warehouse lines, the multiple warehouse lines which you need to be successful. So I would say if someone had capital, and we grew it the old-fashioned way, organically, but if someone had capital and they had some really good professionals to organize them and do it correctly, you can do it. But again, it takes time unless you're going to buy your tickets. Again, then you need cash to buy Freddie, Fannie, Jenny tickets, because I think for the longevity of success for an independent mortgage banker for execution, and you know this out of capital markets, Michael, you need all the options possible. So perhaps buying a company that already had tickets and servicing in play might be the best. Or you could start as a broker. That's how we started. Since we didn't have that big balance sheet, you can, choose your company and establish your relationships and start getting your experience on the broker side, and then start going to, if you're in our state, I would join California MBA, start networking with peers and figure out how you make that bridge to becoming a bigger company. But you could have a very successful broker company. I have guys that are suited extremely well to that. that I've been working with over 30 years. And he used to own his own company, Builders Funding, Marty Storyman. He's perfect in that world. He knows how to put a file together. He throws it over to Rocket or UHM, whoever he's doing business with, and forgets about it and collects a check. And I think that's where when United Wholesale Mortgage and Rocket really went and got their market, I mean, they just started dominating and taking more business, was because the brokers saw the opportunity, the loan officers, to make more money. And they also can vary their comp. And it was more of a money grab play. But back to what we were talking about before, you don't get that fuzzy RWM Home Loans feeling where you have people behind you, a team behind you, a solution-oriented group that is really part of you and your branding that comes alongside of you to design a marketing plan. And it's just a night and day difference. So I'm not in competition at all with the broker world. The broker world suits, to my Kelleher's comment, a certain segment of loan officers very well. But independent mortgage banker is personally what I enjoy. It's much more rewarding. As Scott Morris, our top producer, says in a lot of sales conferences you guys have probably been to, right? You don't chase the money. You do the hard work. You do the hard work first. You do it day in, day out. Then you see results. I played volleyball. I wasn't going to get a college scholarship by showing up at Texas A&M and being a walk-on. I had to play from 6th grade year-round to get to that point in life. Work is no different. You got to work hard at it.
And I think there's an entrepreneur mindset for loan officers, but until you're actually the one running the company, as I've done for a long time, I will say word association. One of the first 3 words that comes to mind is lonely. Like, it is lonely at the top. There's a lot of stress when things are going good. There's a lot of stress when things are going bad. And you read some books about people that are doing the journey for the wrong reasons, and then all of a sudden they're 70 years old, and what do they have to show for it? And I think that is a pro for working within a company with a great culture, because at the end you have a family that you've worked with, you have peers that you've built camaraderie with, and there's something to be said about that versus doing it on your own forever. You got to make sure that where you're going is worth it.
And it's the journey, right, Michael? The journey, like you were saying, being around, having that, family, those people who know, love you, respect you, work with you. We shouldn't have a stigma that because we don't own the company, that we're less somehow, or since we haven't had our own company and put all the risk forward, right? I mean, I think that Scott Morris and Sean Kelly and all my previous owners and Jim Doan, they figured it out because they know what they want to be doing. They don't want to be managing. They don't want all that risk. So they pulled out and just are doing what they are good at and what they love.
Yeah, we had Bobby Nicely from Alcova, and kind of the same message, because I was going through, we had a loss in my family. And so we're at the church, for the funeral and such right around that time. And you look around and they're all getting older. So this is my parents and stuff and my cousins. And I kind of just looked around, it was a chance to reflect at church and realize, the 90 hours a week I'm putting into mortgage. Now I got to stop and look. And this is the clan that I grew up with, all those memories. And that is what's important and the reminder. And it just made me think you should certainly look at that as an important part of life, and having a mortgage company of peers, your clan, that you won that Peloton or that barbecue with, that you went to the outing, like when we had Chrissy Ray as a guest from Mortgage Investors Group. What stood out to me is they don't do fly over drones down at an island. They have memorable, it looks like, meetings among their companies that are just so core and local but big. I think when those type of loan officers that have been at RWM, when they look back, years from now, they'll be very thankful of that family type environment and that they did it that way. So that's what stands out to me with RWM, Mortgage Investors Group, Alcova. And I think we've been very lucky with the guests we've had on here.
Yeah, it's connecting. I think our March Madness was fun. March Madness picnic down at Mission Bay, same kind of thing you're talking about. But those things make a big difference for sure.
I want to switch gears and talk a little bit back about not only the profit share, but how have you been able to capitalize? I mean, there's been a lot of IMBs that have lost money we've seen over the last 2 years, but how have you been able to capitalize on the servicing portion, at least your P&L as far as that part is concerned, if you don't mind, you don't have to answer, but has that part of the company been profitable?
Well, we, like all independent mortgage bankers, I think across the nation, there's very few that have been profitable in the last 24 months. And we have just recently turned that corner, and it's significant. So, and it's going upwards, and we will keep going that way. We added 33 new employees to RWM in Q1. So our recruiting efforts are working. Although I'm part of that, we are utilizing our whole executive team. So these new members, we're making sure, what's so hard in recruiting, I think, is you have to make sure you're bringing on people who think like you do and are a good cultural fit. So we walk the walk, we talk the talk, we are what we say. When we talk about from a capital market standpoint, I think the biggest concern that people have in coming over is that, just like the borrowers, right? They don't want to be recruited and think they're going to get one thing and come to find out that pricing model completely changes on them. And our capital markets and myself coming from the top, we're like, you know what? If anything changes and we feel the marketplace is such that we should be making extra bips, then you should be making extra bip as well along the way. So being transparent, it's a big word and people say it, but they don't do it. It's just, you really do have to, mean what you say and just take the walk steadily. Be fair to your people. I think people get greedy and they forget that sometimes.
Saying you're transparent, but then like after you sign somebody up, the transparency, what's the pitch and what's the actual implementation? And that's why you have to go to the conferences. You have to go to these shows. I've made at Adopt the Brand, a living off of saying that this isn't just me vetting it. I'm vetting it by asking others their experience with whether it's Silverworks Solutions and that persona-based bot. Look, the people, quote, like you are absolutely loving it. That's why I'm introducing it to you. Or Valuations, who, is an appraisal firm. People come off the call and say things that I don't hear other places. So this is why I think loan officers need to that's why they should go to the local chapters, Massachusetts Mortgage Banker, California Mortgage Banker. On that note, and I was kind of sliding in there, I think I did a pretty decent job. Before we get to our guest here, Michael Zhao, do you want to give a quick shout out to our third sponsor on the show?
Oh, you mean ARC? Yes.
Yes.
Okay. Yes, I'm with and represent ARC Family Office. We are a family office investing into debt and equity of real property and other investments. We have some unique opportunities, of course, in our capital market space. So reach out to me if you would like to know more about our short-term debt and how it can benefit an IMB and or your brokerage. Be happy to have a conversation with you, offering some unique short-term financing across state borders that most family offices and private money sources will not do as a result of, we're not expecting any EPOs. So there's no penalties for you to pay off early. So it's very unique in the way we do business. It's all short-term debt, and it's very reasonable once you actually begin to learn more about it.
Yeah, and there's some entrepreneurial IMBs that we've been making the intro, and it's been some interesting conversations around it because there is so much equity out there. Speaking of equity, I'm going to be talking about equity on a show later today, Mike Mills' show, which has had some great guests, and he was nice enough to add me on, and he was educating me on the Joe Rogan effect on how different podcast hosts are regulars on others to amplify the audience. So I said this would be, anytime you're in our audience, Mike, please come up and ask a question. Mike, thank you for, quote, calling in. We're trying to make this as much of a radio show and we tape live as possible. Do you have any questions for Susanne or Michael Zhao? I can't imagine I'm interesting enough. Well, actually, you got me for an hour later.
Yes, I do. I got plenty of questions for you. We'll get to all that later. I do kind of have a question for Susanne. So I worked for IMB as well and have my entire career. I've been doing it about 15 years. And, for my entirety of my career, which I think most mortgage bankers are this way, the primary source for most of our leads has come from, realtor relationships and going out and investing time and creating relationships and adding value to agents and trying to figure out how to market ourselves to them. But with some of the changes that, could be headed our way, with the NAR settlement recently getting approved and now the buyer's compensation being removed from the MLS, and the DOJ are still being left out there to say what, their opinion on this is. We still don't know yet. Are you guys looking at shifting your marketing a little bit to try to get more direct to the consumer? I mean, we've always, advertised to our database and, have done the standard things that all mortgage companies do. But have y'all, really sat down and evaluated any new or innovative ways that you want to try to get more direct to consumer, seeing as there's a possibility, obviously it hasn't happened yet, but there's a possibility that the buyer's agent role could be diminished, in the future of our industry. So I'm curious, as running your own mortgage bank, if that's something that you guys have addressed or if you're looking at.
Good question. Really good question. And I'm going to kind of answer it in two parts. So in terms of consumer direct, we have dabbled in that space before, whereby our approach was more like the Zillow approach back in the day, where we cut our margins very thin out of secondary and paid a per file basis to the loan officers that was under $1,000. So it was strictly a volume play, and others were doing that in the marketplace. But unless you couldn't you needed to close 15 or more of those, right, a day. And let me tell you, the dialers at Rocket, you would be shocked at how much they've closed. 49 million in the last 12 months in refis, where my loan officers would be saying, there's no refis out there. No one's going to refi.
Yep.
There's always a way. I think there's space in that consumer direct where anyone can be successful, but you've got to choose your lane, and you need to have the correct software, the dialers, the SMS to make it really efficient. That is not our core competency. However, we will dabble a little bit in that. For example, one of the guys from West Coast Mortgage, Shane, this year is focusing 100% on reverse. So Michael, you were talking about equity, and it's always been a huge market, and it's just typically been dominated by the big players. I think we do it better. I think we provide better service, better pricing to the consumers. But we are trying some of that consumer direct model within some lanes with specific loan ops. But the second part of your question is, how have we been successful? Because you're absolutely right. We had 10 years of decreasing interest rates. It was very easy to do business, and there was a lot of purchase business going on. So we were realtor dominant. We saw it coming. So 24 months ago, we doubled down on every partnership program you could possibly think of. We expanded collateral in every one of those avenues, picked up our activity out of state, because no longer, my second top producer, Matt Rumfield out of Ramona, figured out in 2021, he left $65,000 on the table of out-of-state business. Because we know properties are, I think predominantly in California, properties, people are killing it in Texas and in some of these other, states where things are more affordable. I've had employees move to South Carolina, North Carolina, Arizona, because properties, you can afford to buy something. So we expanded even a B2B program called Welcome Home. And I've never really heard of anyone doing it quite the way my daughter Lauren came over from Zillow and started working with us 2 years ago. So now I have 2 daughters working. Both of our daughters are Brad and mine. Which is huge blessing in of itself, right? To see my kids almost every day, talk to them on the phone from a work basis, but developed a B2B partnership. So loan officers aren't necessarily super organized and structured when they're going after a B2B relationship. Let's just take the local hospital down the way. They happen to know the HR person, but, wanting to be a preferred lender for their employees and handing out flyers is not enough. So what we did is we created a very structured deck presentation, professional, and we have 2 representatives from corporate go along with the loan officer to negotiate, set up the structure. Sometimes the employer will participate in down payment for the employee, because we know an employee that purchases next to their company is going to be a happy, long-term, individual. And they do lunch and learns and they educate, because that's what, in our industry, what we don't do enough of, Mike Mills, gosh, we have so many mics here, is educate on the opportunities. You don't need 20% down anymore. Hello. And if you're a VA guy, 100% use it, So the second part of my question is, we just went crazy on, you guys have to get a loan from wherever you can do it. You got to get certified in reverses. You got to develop partnerships, divorce attorneys, CPAs, all the, professional, areas where people in your spheres. You need to develop those relationships as well as the realtors. Don't forget them. But it's not just a single-pronged approach. You need to have a multi-pronged marketing approach and automate as much as you can and still do your database, because we can't ignore that. You have to leverage that constantly with relevant information like sales boomerang. Clients want to hear the information that is relevant to them, not necessarily your latest recipe, right, from your CRM, if you haven't worked it well. So does that answer your question?
Yeah. So what I'm hearing you say basically is you kind of, did the approach of, not only did you, like you said, you doubled down on your realtor relationships and went after those partnerships a lot heavier, because, as mortgage banks are struggling out there with volume, a lot of people are pulling back their marketing, and you actually kind of went all in on it. And then also, the B2B, which I am seeing a lot more of, where you're going direct to companies and affinity programs and, getting inside there to reach the consumers through their companies and offer value to them so you can get in front of their employees. So, I think those are great strategies. I've seen a ton of the reverse market, as far as like people promoting it and developing their business around that. I've seen that a lot over the last several months. So I know that that's definitely a big player. I'm also curious, we're all living in the world of AI, coming our direction quickly, and if not already here in many facets, but certainly going to be touching on real estate quite a bit in the next several years. Have you guys, instituted any new technologies within your company that you're utilizing AI more, whether it be either on the recruiting side and using, the bots and whatnot, or even, chat bots, or going into, developing strong lead funnels that are being managed that you don't, because, as loan officers, we're terrible sometimes at follow up, that's industry, unfortunately. Are you guys utilizing any of those new tools as well?
Absolutely. And one thing I'll share first, Brad just got back. My husband, Brad Livingston, was at the Ledge Day for California MBA. And he says, you can't believe the legislation they're trying to work on right now, because they have so much concern over the possibility of AI discriminating and having unintended consequences, right?
Yeah.
To our borrowers. So this is going to be a constant friction, I think, for us going forward, which is a separate topic. But no, I love AI. I love the fact that in 1995, DU and LP, right, they're closed data decisions. We put rules in place, so there can't be any discrimination. It just is going by the rules. So as this generative AI comes in, it's going to be very interesting. But we have created funnels with our marketing, and because our CRM, which is Total Expert, which is all tweaked and customized for us, does a great job. But it's not, to your point, Mike Mills, it's not good at the lead generation and follow-up and SMS. They're just not quite there. So we are using RWM Rise. So Greg Pedersen, you could feel free to, contact him on that. But that's sort of our lead funnel. And then once it becomes a deal, right, then it comes into Encompass. So we're utilizing that. In 2020, we could not have survived without our bot that Tavon, give them a little plug, created alongside with us. And basically it was working 24/7, and it just flags certain rules that don't make sense. So we are just taking it in little bits and pieces. It doesn't always work. Technology is not always seamless. We've been working on bots with CICs and CDs. And there's a big difference too, because, I am not a deal mortgage, right? They have their own proprietary software. I can't even tell you the hundreds of thousands of dollars they have available to themselves to develop their systems. I have to rely on all my vendor relationships. And thus, I think my process of going to my seamless digital mortgage is a little more chunky, maybe, but we are always working on it. We find Simple Nexus to be an amazing partner for us. We're able to do a lot of the income verification, asset verifications, and we're working towards that path to keep up with our, keep up with those rocket mortgages as best we can, Mike.
And thank you for calling in, Mike. That's the spirit of this show and why we do it live is someday, hopefully, maybe offices will be back and we'll be a morning mortgage radio show for the drive-in. With that said, I think I'm glad you guys talked about AI in the outreach part, because obviously AI has a long way to go in the mortgage. And even when it makes progress, because the companies that build it can't disclose their algorithms because that's their IP to sell for big money, that's why the government and especially this administration has a problem, because you don't know about the inherent biasness of this new product. So they're going to naturally, every time we take 2 steps forward, make sure there's 3 steps back on that, which will stunt the growth of. But that's why we do so well in this industry. We know it better than the outsiders, right? I will be talking on the show too about, I think one of the problems with follow-up is that second lien, second mortgages, and I've seen a lot of liquidation in this area. I've seen a lot of great programs. It still has trouble getting to the loan officers, whether it's education or they're just not paid enough. But this mind shift of mortgage company, or is it a real estate finance company? Because you have $13 trillion of debt available, and you have 800,000 loan officers all going for it. You have a large amount of people that don't want to touch it. And then you have $26 trillion in equity that is tappable. And a lot of loan officers don't know how to go for it yet. And it's an excuse to actually communicate with your past clients. So I'm going to be talking about that a lot on Mike's show. HEI loans, I'm out building a program around, because my birdies are telling me, just like I saw it already happen for the last 2 years on the second lien HELOC, that liquidation, those ratings are coming. And I think it's going to be a great opportunity for loan officers, those equity programs. So with all that said, Susan, we did love having you on the show today. I think you gave me a re-energized feeling around the reminder that culture and how many great companies are here and why a support system is so important. And if you stay somewhat away from the headlines and surround yourself with people like you and your leadership team, you'll see that there's a lot of sunny days ahead. You just need a good support system to get there.
Absolutely. And it's a positive mindset, right? It's all that noise you just alluded to. And I just wrote an article for one of my Arizona loan officers, and I was looking at the MBA stats. We have closed 1,000, not us as a nation, as independent mortgage bankers and banks, $1,612 billion worth of purchase loans from 2023 to first quarter in 2024. So my view is, hey, get out and get them, guys, because they're there, right? And go back to your tools. What are the tools in your toolbox? And keep working hard, because there's some business out there. So do it. Go grab it.
And on that note, while you're driving around to these different realtor places or these different lunch and learns or whatever you're doing to go grab that, like Susan says, and you should go grab it, please tune into our show. Again, if you're listening on Spotify, thank you. YouTube podcast, thank you. Give us a subscribe so you get alerted when all these great IMB leaders are on here. And if you're just listening to our show because you're thinking about joining RWM and you just wanted to hear this one last time, I don't know how you can't say yes now. So thank you, Susan. We appreciate it. And thank you to our listeners. Looking forward to having our live audience next week.